NIO stock has been under heavy pressure in recent months, but beneath the volatility there is a story unfolding that many investors may not be paying close enough attention to. The headline numbers this week show a company that is still growing, still expanding, and still pushing into new markets with a level of ambition that stands out in the global electric vehicle industry. And right now, as we head into the weekend, NIO is entering a phase that could reshape its long-term narrative, the global rollout of its Firefly sub-brand. In November, NIO delivered more than 36,000 vehicles, marking a 76% increase year-over-year. That kind of growth is rarely seen among legacy automakers and remains impressive even compared to NIO's EV peers. The company has shown again that demand for its vehicles is not evaporating. In fact, the delivery numbers continue to prove that the brand is gaining traction, especially in its home market of China. But while deliveries give a snapshot of the present, NIO's next major leap may come from Firefly, the company's more affordable EV brand designed to reach buyers beyond the premium segment. Firefly recently passed 30,000 total deliveries, and the brand is preparing to expand into global markets. This includes right-hand drive production for countries such as the United Kingdom, Thailand, Singapore, and potentially Australia and New Zealand. For NIO, this represents an entirely new growth channel, one that could add significant volume and brand awareness far beyond China. Firefly exists for a reason. NIO understands that global EV adoption is accelerating most rapidly in the affordable and compact segments. While the main NIO brand focuses on premium SUVs and sedans, the Firefly sub-brand exists to capture a wider demographic, particularly younger drivers and buyers seeking entry-level EVs. In other words, NIO is positioning itself to participate in multiple layers of the market simultaneously. Firefly's design, pricing, and market positioning give NIO the opportunity to compete in regions where premium EVs struggle against higher tariffs, economic uncertainty, or limited charging infrastructure. A smaller, affordable EV is easier to scale across borders. And as Firefly prepares to roll out right-hand drive versions over the next year, NIO gains exposure to markets where Tesla, BYD, and other automakers are aggressively pushing compact models. This matters because global EV growth is shifting. For years, the focus was on high-end luxury EVs and long-range vehicles. But today, with economic pressure growing and customers prioritizing value, the hottest part of the market is in small, efficient, budget-friendly EVs. Firefly is built to compete directly in that zone. And for NIO, which has spent years building premium products, wide-scale adoption of an affordable sub-brand could open the door to millions of potential customers. Beyond Firefly, analysts have begun revisiting NIO's valuation. Some discounted cash flow models now suggest that NIO may be significantly undervalued relative to its long-term growth potential. The company's stock price has fallen more than 80% over the last few years, yet its deliveries have grown, its lineup has expanded, and its global presence is larger than ever before. The current market cap does not reflect the scale of the company's operations or its global footprint. This disconnect between stock performance and business performance is not unusual for emerging EV companies. Investors often react to short-term sentiment, broader market concerns, or macroeconomic fears. In NIO's case, Chinese ADRs have faced continuous pressure from geopolitical tension, regulatory uncertainty, and concerns about the Chinese economy. These factors weigh on the stock even when the underlying business continues to execute. But as NIO enters this next phase of global expansion, the gap between perception and reality may begin to narrow. Firefly's push into Europe and other international markets gives NIO more than just additional volume. It gives the company strategic diversification. Instead of relying heavily on China, NIO gains exposure to regions with stronger regulatory support for EVs, more stable economic conditions, and higher per-vehicle profitability. The international rollout also increases brand visibility. NIO is still unknown to many EV buyers outside China. Firefly provides a gateway into those markets. A customer may not immediately buy a premium NIO ES8 or ET5, but they might buy a Firefly. And once a customer enters a brand ecosystem, loyalty often develops. This creates an opportunity for long-term growth across NIO's entire lineup. Another aspect of the Firefly expansion that investors should consider is the production strategy. NIO has invested heavily in modern, efficient manufacturing. As Firefly scales, production costs decline, margins improve, and overall operational efficiency increases. If NIO can achieve meaningful volume through this sub-brand, economies of scale may finally begin to work in its favor. And profitability has always been the biggest question surrounding the company. At the same time, NIO continues to innovate technically. The company remains focused on battery swap technology, which offers a unique competitive advantage in markets where charging infrastructure is limited or overcrowded. Firefly vehicles may eventually benefit from this network as well, depending on market adoption. While battery swap may not become the global standard, it gives NIO a differentiating feature in key markets. When looking at the long-term picture, Firefly's expansion combines several elements: affordability, volume potential, international diversification, and brand scalability. These ingredients create an attractive framework for future growth, even though the company still faces clear risks. NIO is not yet profitable, competition in the EV space is intense, and geopolitical tensions continue to hang over Chinese ADRs. But the path forward for NIO is not defined by its obstacles, it is defined by its opportunities. Firefly is one of the biggest opportunities the company has created to date. Investors often focus on the immediate stock price, how much it rose today, how much it fell yesterday, or whether it can reclaim a specific technical level. But long-term growth companies are not defined by daily fluctuations. They are shaped by their ability to enter new markets, adapt to changing consumer behavior, and scale production while maintaining product quality. Firefly demonstrates NIO's intention to operate on a global stage, not just a regional one. This creates a timely and compelling angle for understanding NIO today. The company is not simply reacting to market conditions, it is actively shaping its future. And the market may not yet appreciate what Firefly represents. Investors unfamiliar with the brand may think of NIO solely as a premium Chinese EV maker. But Firefly breaks that mold. It positions NIO in the competitive mass market arena where global EV adoption is accelerating the fastest. As Firefly prepares to enter right-hand drive markets, NIO also gains access to regions with strong EV incentives, high adoption rates, and growing charging infrastructure. The United Kingdom, for example, is one of Europe's most mature EV markets. Southeast Asia, including Thailand and Singapore, is rapidly expanding its EV transition. These markets provide opportunities for early footholds before competition intensifies. The key question for investors is whether this long-term potential is reflected in the current stock price. Many valuation models suggest it is not. The stock's decline appears disconnected from its operational progress. Delivery numbers continue rising. Expansion plans continue moving forward. And customer reception to NIO's vehicles remains strong in China. The company still has challenges to overcome, including profitability and regulatory risk. But the market may be underestimating NIO's ability to succeed globally, especially with a brand like Firefly that aligns with evolving EV demand trends. For now, the story remains the same: NIO is building, expanding, and growing, even while the stock faces pressure. Firefly's expansion offers a look at where the company may be heading, not just where it has been. The next several months will reveal how aggressively NIO pushes into international markets and whether Firefly becomes a major global player. As we head into the weekend, the most fascinating part of the NIO story is not the stock price. It is the strategy unfolding behind the scenes. A strategy built on scale, diversification, and the ambition to compete globally in the segment of the EV market growing the fastest.